Even if you've owned a home before, buying and selling at the same time can be a little stressful. But the good thing is even if you haven't done this before, real estate professionals, we've done it a lot of times, and there are some strategies that you can use to help make things easier. I'm Rebecca Richardson, aka the Mortgage Mentor, and I love sharing everything that I know about mortgages and real estate to make it easier for you. So if this is the first time that we've met, please be sure to subscribe and comment with any questions. So one of the first things is when somebody has a home to sell and they want to buy at the same time is around being able to make a non-contingent offer. So usually when you're making an offer on a property, it's going to either be considered non-contingent or contingent. And what that is tied to is, do you have a house to sell in order to buy this one? And that's really a two-part question, because when we're looking at do you need to sell in order to buy, the first question is, can you qualify with both mortgage payments? So even if, let's say, you're planning on buying and immediately selling right after, if that home has not closed, if the home that you're currently in has not closed by the time that you're buying your new one, from a mortgage perspective, in 99% of the situations, we're having to count both mortgage payment. And so even though that might not necessarily be the budget that you want or that you expect because you know that your house is going to sell quickly. So even if you know that it's going to sell quickly, then from a mortgage perspective, we do still have to qualify with both mortgage payment. The good news is that a lot of loan types do allow for a higher debt to income ratio. And what that means is just basically, even though it's not necessarily the budget that you would want, there is room in the qualification of the mortgage of being able to carry both mortgage payment. The second part of if you need to sell in order to buy is going to be, where is the down payment coming from? So a lot of times, if you're looking to do this, you're probably looking at a conventional loan. There are other scenarios where maybe we are looking at an FHA or a VA loan, but that's a little bit more involved and that's a different video. But if we're looking at conventional, let's say that the minimum that you need, since you're not a first-time home buyer, the minimum that you need is 5% down. And that can come from everywhere from, it can even come as a 401k loan. You can also, if you do have a home equity line of credit or a HELOC on your current home, you can draw on that for the down payment on the new home. It can also be a gift. So if you have family that is willing to gift you that down payment, if all of your money is basically tied up in your house and you don't want to have to sell in order to buy, you can source that down payment elsewhere and still be able to purchase, as long as you have a source for the down payment and as long as you can qualify with both mortgage payments. Now, the second part then is getting more into the strategy. So let's say that you can qualify with both homes, but you really don't want to only put 5% down. You do want to use the assets, or you do want to use the equity that is in your home. You don't owe a whole lot, it's worth a whole lot, and when you sell, you know you're going to make a nice chunk of change that you want to put towards the new house. So one of the ways to do that is what's called a bridge loan, and that's where there is a loan that is placed on your current home to tap into that equity, and then that provides the down payment for the new home. The pros of that strategy is that you can buy the new home with the intended down payment that you want using the equity from your current home. A drawback is that you are going to have closing costs for that bridge loan, and sometimes they can get pretty pricey. So even though it's an option that's available, some buyers choose not to go that route because they don't necessarily want to pay extra closing costs when it's really kind of a temporary solution. So a lot of times what I'm recommending to clients is that they do what is called a recast. And a recast is where you are qualifying with both mortgage payments, you are qualifying with both homes, and you are using the down payment from a different source, like I mentioned, checking, savings, maybe even a 401k loan, something along those lines. So one option is that you are qualifying with both mortgage payments and you're using the down payment that's comfortable with the assets that you can easily access. So maybe it's just, again, checking savings as long as you're meeting that 5% down requirement. Then once your house sells and you make that large profit on your sale, you are turning around and putting that as a large principal payment on the new mortgage. So there are a couple things to keep in mind for the recast. One of the reasons why it's so great is that when you are doing it as a recast and not just a large principal payment, so you do want to contact your mortgage company, the mortgage servicer, the company that you're making payments to, and let them know, hey, I have a large principal payment I would like to make, and I would like to recast my mortgage. What that means in the mortgage world is we're going to recalculate the payment. Let's say that the original loan balance was $400,000 and the payment for that mortgage is based on that $400,000. You come in maybe maybe a month or two after you purchase the home, because now your previous one has sold, and you say, hey, I'd like to put an additional $150 down to this new mortgage, meaning that the new balance will be $250 instead of $400. So one of the benefits of a recast and stating that intention to your mortgage servicer before you put the money down is that they understand that the intention is that you want the payment recalculated. And so the payment will be recalculated as if the loan balance was $250 from the beginning, but it'll be recalculated as if the balance was $250 instead of $400. So the alternative is, if you don't let the mortgage company know that you want to do a recast, then you certainly have the benefit of paying less interest over time. It's going to accelerate the mortgage. You will pay it off sooner. You can always make principal payments. There's no prepayment penalty pretty much for any conventional loan, so you don't really have to worry about that. But it's not necessarily going to affect your payment unless you let the mortgage servicing company, your mortgage company, know that you want to do that recast. In general, that's a pretty quick process, pretty minimal fee for that, somewhere in the neighborhood of, I've seen anywhere from about $250 to $500 depending on who the company is. And the processing time for that is pretty minimal. The benefit of doing it that way versus necessarily, say, a refinance is if you locked in a great rate for your new mortgage, you're not necessarily going to want to refinance because perhaps current rates are higher than what you have. You want to be able to keep that rate. And also perhaps you don't want to have the costs associated with a traditional refinance. So for a couple $100, you're able to apply that principal payment to your loan balance and then have that payment recalculated. So that is a fantastic way for being able to buy and sell at the same time, even if you can't necessarily access the equity that is in your home at the time of purchasing. Now, let's say that all of those numbers don't work out from the standpoint of, in order to qualify for what you want, you need the money from your house, but the equity isn't able to be accessed because either there's not a home equity line of credit or you don't qualify with the payments on a first mortgage, a new mortgage, and a HELOC. It's a lot of math, right? It's a lot of money. So if that's the case, then you may need to make a contingent offer, and it is contingent upon the sale of your property. So one of the best ways to handle that from a negotiation standpoint is making sure that your file is fully pre-approved. And that's good advice for anything, but particularly when you are making an offer, you want to be able to tell the seller that you are as ready as possible. On the real estate side with your realtor is going to be able to give some feedback on how quickly the homes are selling in your area, what you're planning on pricing it for, give some of those type of reassurances to the listing agent of, listen, this feels like a pretty done deal because this is a great listing. We know what the market is doing, things like that. On the mortgage side, it's very advantageous to make sure that you're fully pre-approved. And fully pre-approved looks like giving income documentation, asset documentation, and ideally we're either having a underwriter review it, or if there is someone like myself that's been doing mortgages for a long, long time and we know the questions, we know what underwriters are looking for, we are able to give those assurances to say, yes, as soon as this house sells, they absolutely qualify for this new house. If perhaps they're self-employed, we've reviewed taxes. If there's commission, we've reviewed the year-over-year commission changes, right? So we're going as deep as we possibly can, and we're going as far down the process as we possibly can without officially being under contract. So sometimes that looks like a conversation between the loan officer and the listing agent to say, yes, I am working with these buyers. They are well qualified. We have all of their documentation. It's been reviewed and they are A+ ready to go. Obviously, we're not going to share any private information like credit scores or anything that's really very truly specific and that you would want to keep private, but there's enough that we can share to give the assurances to the listing agent so they can let their seller know this is a good offer. They, just probably like the seller, are needing to sell in order to buy. So those are two really important things to keep in mind when you are looking to buy and sell at the same time. Is one, what is the strategy for affording both mortgages and the source of the down payment if you want to be able to make an offer that's non-contingent? Or if those numbers don't work out and you do need to make it contingent, then how can we give as much assurance as possible to the seller and the listing agent that this is a good loan and that it's likely to result in a final approval in just a few short weeks? One other thing to keep in mind is that it is possible to actually buy and sell on the same day. So if you do need to make a contingent offer, you can also time it up that you are selling selling your previous home or your current home and buying the new one in the same day. And the way that that works is, let's say that you're selling at 10 o'clock, as long as you're buying at 11 o'clock or after, so that closing has happened for your previous home, then we are able to underwrite the file with the understanding that your previous home will be sold by the time that we close on the new home. And that can be kind of a good halfway measure from the standpoint of being able to make sure that there's not any kind of lag, because it's not like you need to sell, then wait for the money deposited into your account, and then purchase. You can actually do both of those at the same day. The last option is that you could sell and then do a rent back from the sellers. So that's not necessarily the strategy that all markets will enjoy, or that not all sellers, necessarily would entertain in all markets. But I certainly see it frequently enough that it is an option that's out there. And the way that that would work is that you would sell, you would get your proceeds, and then you could actually rent back from your buyers for a week to several weeks as you were waiting for everything to be done on your new home. And then you're closing on that new home and moving out after paying a little bit of rent to your buyers. I say all of this just to say that it can feel completely overwhelming when you're thinking about buying and selling. It feels sometimes like you're a first-time home buyer all over again, but just know that there are multiple ways that can happen to be able to buy and sell. And working with a strong realtor and a strong loan officer will help make sure that we're coming up with a plan that fits your scenario to minimize any kind of downtime, minimize stress, and make a very smooth transition from your current home to your new home. So as always, if you have any questions, please comment below or please reach out to me. I'd love to help.